A Good Business San Diego financial news update, sponsored by Wilsey Asset Management.
Good evening. I'm Brent Wilsey, president of Wilsey Asset Management. You know, we always like to hold those hot stocks, those top stocks. We go to the restaurant, or we go to parties with our friends. We like to say, yes, I'm a pretty smart investor. I have these, Apple and Amazon and Google in my portfolio. We like saying that, but sometimes your emotions get in the way. And I will say, I know these stocks have done very well over the last 15 to 20 years. But sometimes your emotions can cloud your judgment when it comes to investing, because just because they've done well over the last 10, 15 years does not mean they'll do well over the next 5 years. And what I'm talking about, there's a survey, or not a survey, but actually a study done over a recent 5-year period, that the tech stocks really didn't outperform a lot of your, we'll call them boring stocks. Let me give you a couple examples. Apple computer. Oh, gee, it's no longer a computer, just Apple, over the last 5 years, was up 114%. Very respectable, did very well. But there's other companies that have outperformed Apple. There's a tractor company called Tractor Supply. A tractor company did better than Apple? Yes, they did. They were up 119%, and they pay a 1.5% dividend. Insurance company. How can an insurance company outperform Apple? Actually, Allstate Insurance did. Allstate Insurance, they were up 115%, and they pay a 2% dividend over 5 years. That's about an additional 10%, not including compounding. Now, Amazon, I was surprised to see that Amazon was only up 49% over the last 5 years, and there's plenty of companies that did outperform Amazon. And if you're a really good investor and word value investors, you really find some good things to buy that are on sale. There's a company called Tapestry. Then the same period 5 years ago, over that time frame, it was up 545%, and at that time when you bought it, you were earning about a 4 to about a 5% dividend. So this is very important, because what you're looking at, not just what something's done in the past, but what we'll do going forward, and get the emotions out of the equation, because sometimes it can cloud your judgment on the right investments to do. And I want to talk about those dividends, because they're very important. Your tech stocks don't pay dividends. Apple pays, I think, about a 0.4% dividend. But dividends can be used for future investments, used for cash flow, and companies. I talked about Tapestry earning that 5% dividend. Well, if you bought it 5 years ago, you lock in that dividend. New investors now getting 2% based on the price of the stock. So you're locking that dividend. And also, too, many companies increase that dividend over years to come. So that really helps on the dividend. You can use that cash flow to buy something else, which will compound on top of what those earnings are. So sometimes the tech stocks sound good, but they're doing okay, but you could do better if you look at what you're actually doing. Before I run out of time here, I do want to talk about next week is when the Federal Reserve meets to adjust interest rates. Today, we had the PPI report come out on inflation. That's Producer Price Index. Tomorrow, CPI, Consumer Price Index. And the PPI today was actually down 0.1%. It was expected to be up 0.3%. So no sign of inflation yet. This is very important, because it looks like they'll cut interest rates now, probably at least a quarter point next week, maybe, and talk even maybe a half a point by next week. I did see the 10-year Treasury was at about 4.06 today. So positive news there. Looks like there will be definitely an interest rate cut, and we'll see how the economy does from that. For more information, as always, go to our website, smartinvesting2000.com. Again, that's smartinvesting2000.com. Thanks for watching, and have a great evening.
This has been a Good Business San Diego financial news update.